What is up, guys? Happy Friday. We are going to continue with back testing Fridays. And the first pair that we're going to go ahead and look at is US30. Now, I was looking for buys, obviously, right? Because the market's been bullish for a while, right? Now, the thing is anytime you're waiting for buys, guys, you really just have to find your zones and mark up and just wait there and just wait patiently, right? Now, as I'm looking at US30 on the 4 hour time frame, if we go to the daily, it makes things a lot cleaner, right? We can go ahead and clear some noise. Now, even for things like this, right? I wanted to take buys here. Market never came down. You guys can easily see market never came to my point, my entry zone. But when the market ended up taking this opportunity, I ended up breaking down how we could have caught opportunities down inside of here on lower time frames based off of the sweep of liquidity. Now, that's one thing that I want to start breaking down after we go get done through our risk to award, because we've been breaking down risk to award, and I hope you guys have been understanding risk to award a bit better. Has that been helping you guys by any chance? Give me a one if that's been helping you. The risk to award calls that I've been breaking down on Monday. Because in my opinion, guys, risk to award, if you guys are waiting for really good setups and you guys are focused on 1 to 2 pairs, I mean, running your odds, trusting your risk to award. I mean, I won't be honest. I probably took like 3 or 4 losses this week before I took my 2 wins. And my 2 wins happened today, right? And I was down. Let that be known. And that happened maybe on Tuesday, Wednesday. So I was down this whole week until today, right? Thanks to US30 and Nest, right? But it's all about risk to award because I followed my 10 trade cycle. You know what I'm saying? And a come up is a come up. If you're in profit for the end of the week, that's a good thing, right? That is a good thing. Now, we were looking to buy here. Market doesn't come down that low, but it gives us a break of structure to the downside and then continues to the upside. So if you're looking at this like an inverted, this would be my change of direction, right? Now, since we had this change of direction to the upside and we continue going higher, that right there is telling me I want to start looking for more buy opportunities. Give me a 3 if that makes sense. Even if you weren't looking at this like an inverted, because I know sometimes this might confuse some of you guys. And I kind of break it down like that because sometimes it's easier to see it like that. Because in my opinion, this is way more confusing, right? Higher high, higher low, higher high. You know, at least we're breaking down the structure in between and why we're looking to go higher. You know what I mean? But if you're looking at it like this is still my break of structure to the upside. So no matter what, we should still be looking for buy continuations, right? I hope that makes sense. Give me a 5 if that makes sense, and give me a question mark if you are confused, right? There's 2 ways to look at structure, right? With inverted market, inverted head and shoulder, that tells you a story to why we're going to continue looking for buys, right? And then there's structure that goes from higher high to higher low to higher high. And that also is going to tell you a story. But on both biases, we're continuing that bullish bias because we're continuing to break structure to the upside. Give me a 10 if that makes sense. And I'll be honest, I don't really mark it up like this with break of structure. When the market's this detailed, in my opinion, you should mark it up. You know, that is a break of structure to the downside, especially if you do like trading head and shoulders or with smart money type structure. That is my break of structure or liquidity sweep to the downside. It did feel an imbalance over here on this left-hand side. We do get a change of direction, right? Now, with this confirmation, I want to continue to look for buys, right? So on this time frame, I have my left shoulder and my starting point that gives me the break of structure or my change of direction here, right? Now, that's it as of right now. right? As of right now, that is it. So let's take a look. Where am I at? Oh, I haven't played it back. Have I played it back? No, I haven't. Okay. Drop to lower time frames, 4 hour. All right. That's why I was confused. Okay. This is what we're looking at now. This is current price. This is current price. So this is what the market is looking like right now. So this is probably a continuation, possibly a continuation, whether it's here, continue going higher, or market coming back down and hitting our left shoulder and going higher. Now, this move here, let's step back. Let's take a step back. I thought I was in playback mode for some reason. Let's figure out and break down why the market ended up giving us this massive run to the upside. Right. I thought I was breaking down this setup because the same thing happened right here where it kind of misses. All right, let's go ahead and break down. Let's go to lower time frame. Let's go ahead. Let's remove this for clarity, and we can leave this here. All right, let's leave that here. Now, the thing is, guys, anytime that we get a break of structure to the downside and we are expecting the market to go bullish, right? One, I want to sit at my starting point zone. That's the safe spot, right? If you're looking to play conservative, right? Let's just let that be known. If you're looking to play safe and play conservative, just wait at the safe zone. Wait for your starting point to get touched. But sometimes the market, this is what's going to happen. You're going to be missed and the market's going to run. Now, it's not a bad thing. Like you're still right? You're still correct on your bias. The market just didn't come down low enough for you. And that just happened. That happens with every strategy, right? But how can we catch these opportunities? How can we catch these opportunities in here just in case the market doesn't come low enough? Does that make sense? Give me a 2 if that makes sense. How can we catch the move here just in case the market doesn't come down low enough to my buy zone? Right? This is how we get better. This is how we continue to develop, right? Now, this is what I want you guys to try to understand. And this is what kind of like, it took me a while to understand this. Anytime that we're in a bullish trend, we're in a bullish trend. We're looking to go for buys around here. Anytime the market is heading down and breaking structure to the downside, this is a sweep of liquidity. It was liquidity. Market broke structure to the downside. That becomes a liquidity sweep. Give me a 1 if that makes sense. Now, this is the thing. Anytime there is a sweep of liquidity, let's see if I can zoom in. Anytime there's a sweep of liquidity, right inside of here, there's a possibility, a possible move that when the market gives us that change of direction, there's a chance to go higher. And that happens right here at the lowest area. Why? Why are we thinking like this? Because we're trying to send the market back up higher and continue with the move. Give me a 3 if that's making sense. The thing is, and sometimes we're going to drop on lower time frames, but the thing is, right, that may give you some trouble. And you may catch a move right here. I'm not saying you can't catch a move, right? But we may have some trouble because there is also a selling starting point. We also broke structure. So anytime you see that break of structure, that automatically gives us a BOS to the downside, and that automatically gives us a starting point, right? If we get a candle closure beneath your liquidity line, beneath your support or above your resistance, that is a break of structure, but you also have to think that was just a liquidity sweep. Okay. But every time we have a break of structure, we always have a starting point. So I'm not saying you can't catch this baby move right here inside this little zone. But once we get to this area, this is where we might have some trouble. And this is where we start heading back down and creating that new low. And that setup happens all over again to where we have my break of structure. We have the BOS of the downside. And again, if you're looking to play aggressive, again, I'm very picky, so I don't bite on every move, and neither should you. I'm just going to let that be known. But let's say you have a setup that just looks, you're like, you know what, this is the one. I'm willing to run this opportunity, right? And let's say you do catch this opportunity right here. Again, because this was my very last break of structure, that gives us a starting point in this zone, which means once we come to this area, we might have some trouble and we might start heading back down, creating that new setup again. Does that make sense, guys? So the thing is, I want to educate you on why the market is moving this way. But the thing is, I don't want you to bite on every single opportunity you see, because I promise you, their market will give you some opportunities like this. And you will bite, and it will give you some moves. And then the market's going to continue to crash. But at some point, you have to learn to wait for the one, the grade A setups. You have to break down the setups that you like, what you consider a grade A, right? I've done a lot of back testing, and when I see something happen, when I see that liquidity sweep, when I see that nasty wick and change of direction, when I see that nasty push to the downside and then a nasty push to the upside, giving us that reversal, I know that's the move. When it happens, boom, right? Real quick, I'm like, okay, I trained myself to say that's the move right there. I want you guys to get to that level, right? And that comes with repetition. That comes with marking up your zones. And I promise you guys might probably think like, oh man, it's going to take me a while. Guys, it's not going to take you that long. It's not going to take you that long. If you lock in, we still have like 4 months at the end of the year, 4 or 5 months. Guys, I promise you guys lock in. I can guarantee you by the time January 1st starts, your trading can be at a different level. Your trading could be at a different level. Now, let me tell you guys, if I recommend you do 2 pairs for the rest of the year, are you guys willing to do that to level up your trading? Two pairs clears all the noise. It lets you focus on structure, and you're just waiting, like you're just being patient. You're just being paid. Like the more you focus on 2 pairs or 1 pair, that's like even better, because then you're gonna start seeing these moves happen all the time, and you're just like, that's what I can do now, right? Thankfully, now for me, I don't bite on every move. Now I'm telling myself, okay, yes, if we can get this change of character, I can see it coming up here. If this zone holds and we can get this change of character to the downside, I can see it making new lows, right? But still, I'm preserving all my capital for the big boy, just in case market wants to get noisy in these areas, right? Because those are counter trends, right? But understanding what setup is the setup, man, very key. Comes with a lot of back testing. And honestly, guys, I feel like most of you guys on this call, let me go through this participant list real quick. I feel like 100%. I feel like most of you guys on this call know enough information about your strategy, whether it's smart money or levels, that it's not really so much about waiting for the next best piece of information, It's just about repping out the information you already have, right? To feel confident in it, to trust that the information you've been told actually works. Once you believe in it, there's like, you can't break that trust. You can't, you know it works. You know what I mean? Give me a 10 if that makes sense. Because right now, a lot of you guys are watching it work for other people. But when you start repping it yourself and you're like, bro, low key, I'm him. I'm Himothy, bro. Like, and you're like 6 months in and things are starting to roll. Right? God, I'm telling you, crazy, crazy. Now the thing is, let me get back to this. Anytime we break structure to the downside, it is a break of structure, but it's also liquidity. Let's delete this and just focus on what's going on here for them. Right? So again, same thing happens. The market can start to give us that head and shoulder type pattern. But again, I'm not biting on every single one. And honestly, I want the ones that are as close to my zone as possible. Close to my zone as possible. Okay. Now, once we get that, then we can start participating. So same thing, same rules apply. Market gives me that break of structure. I have my BOS. This is my change of direction. Now, let's say the market misses my zone. It is what it is, right? This is where we run our risk to reward, because you know what? The market is going to entice you with really nice zones, especially if you're looking at that lower time frame. Now, I'm going to tell you why. Some of you guys don't know why you're taking losses on the 5 minute, on the 1 minute, on the 15 minute, and it's giving you a perfect head and shoulder setup. And you're like, man, head and shoulders, smart money, this don't work. Break of structure, change of direction, this don't work. Man, liquidity sweep, imbalance, man, this don't work. But the thing is, you're not understanding the manipulation that it's having on you. You're just, boom, the setup, boom, the setup, the setup. But you're not breaking down why it's manipulating you, right? Trust me, I took a lot of losses. So I was like, bro, why am like, I feel like I'm getting in early. That was always my thought. Does anybody feel like you're getting in early and then boom, the move happens? Give me a 1 if that's like, if you ever felt like that. So if you still, sometimes I still feel like that. And when I do, I know I got in early. Now this is the thing, right? Awesome, Andre. Now, once we get this change of direction, we're looking at this. Now, again, let's say this black line is the 4-hour time frame, and let's say this blue line is the 5 minute. So now we have dropped down to lower time frames, right? Because we want to go ahead and catch this snipe opportunity. Now, we're looking for buys here now. Now, let's say this market does push up a little bit. Let's say it does give some profit, and the market starts to head down. And then you enter it again because you're like, you know what? No, I trust it. I trust it. I'm going to enter again. The market does give you some more profit. And the market just continues to go. Now let's clean everything up. Notice how it manipulated you here. But now let's reassess. Did we get a brand new break of structure? Yes, we did. So now this is my change of direction line. Give me a 2 if that makes sense. So and sometimes this happens right here, right? Because technically, right, my stop loss should be here. So let's say the same thing happens again, right? Let's say you took one loss, and this is where risk to reward comes from. Like, this is why it helps so much. Let's just say, boom, You're looking to take buys here. That's a nasty, risk to reward. Let's go. But let's say, boom, that's one loss. Down -1. Down -1. Darn. Gosh darn it. Right? Now let's say it happens again. We get some profit. Uh-oh, market goes deeper. We got to break a structure. Cool. Mark it up. Actually, let's just move it. This is my change of direction line. Let's say the market does give us a change of direction. And let's say it even builds liquidity, right? Because we like liquidity. Those are target points. Let's say it comes to our buy zone, gives us some profit, and then just starts to dance. And then it happens again. What do you think it did right here? What do you think it did right here, guys? As simple as, I mean, it probably doesn't seem that simple, but they manipulated you. They enticed you to get in because they know you're looking for the buys. They enticed you. They even threw a little bit of liquidity out there. Now that's where they went wrong. I feel like when they leave liquidity, that's where they went wrong. Because if you're going to leave all this liquidity, hey, you can get me all you want, but sooner or later, I do know you will be back in this area. Give me an 8 if that makes sense. You can get me all you want, bro. But I do know if I can catch you, it should be making new highs. It should be making new highs, right? So let's go ahead and continue. We have to reassess. What just happened? Yes, they manipulated you in the setup. Break a structure to the downside. Oops. Where's my change of direction line here? Cool. Let's see. Okay, now we're down 2. Let's continue. Let's say it happens again. Goes lower. BOS. We change direction. Cool. This is my BOS line. So we're like, okay, cool. We're going to run our odds one more time. Next buy zone. And then it does it again. Gives you a little bit of profit. Gives you a little bit of profit. And then hit your stop loss one more time. And you're like, bro, like, do I know how to trade? Like, do I got to go back to the basics and go to square one? Wouldn't that be going against the market at that point? No, because we should be going with the trend, with the confirmation the market was giving us here. Break a structure. If the market gives us the bullish BOS, we're continuing with the bullish bias. The market's just being toxic here. Does that make sense? Yes. Yeah, we don't get a change of direction to where we actually start looking for sales till right here. This is my change of direction for sell opportunity, but still, that's still my stop loss for the buys, technically. Yeah, I didn't make the lower low. Yes, it's all the noise in between. Exactly. Exactly. Thank you. Yes. Thank you. And again, this can be cleared up by going to higher time frame, right? I promise you. What does this look like on higher time frame? You see how there's so much structure here? On, let's say this is the 5 minute. On the 1 hour is probably just simple like that. Boom. 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 Yep. If this is on the 1 minute, this is what the 15 minute looks like. Clear structure. right? This is why, like, I'm not opposed to jumping up a higher time frame just to clear up the noise. This right here happened a lot. Happened a lot. Sometimes it still happens a lot. Sometimes the market's gonna have their day with you. It's just not your day that day, right? Like it happens, right? But like for sure, the second year, I'm like, bro, like I cannot trade. And the market, you know what happens? So I'm like, okay, cool. I get it. I guess I'm not that good, you know? Market gives me a break of structure to the downside. And this is the thing right here. Now I say, you know what? I'm not going to look for buys anymore. I'm going to start looking for sells. And this is where we go wrong because the market never violated your zone. It's just very, very deep in there. And that's where people get scared. Why? Because people over leverage, they risk too much. They're still fairly new, so they're still emotional, very tied. But look, if the market does not hit your stop loss, guys, you should not be worried, right? Especially like we're trying to catch the snipe, right? But a lot of people are in this trade like this. A lot of people are holding drawdown. There are times where I hold drawdown like this on a test trade. And then when we get this change of direction, boom, I'm entering a bigger lot where now my risk to reward starts to look like this, a bit tighter, and the risk to reward looks even better, right? So I still hold drawdown like this because I still want to be in the setup. I don't want to be missed, right? I still want to be in the setup, right? So again, this is where people go wrong. They start to look for the counter trend and then they take another loss. Market gives us the early signs of change of direction, right? Earliest signs of change of direction. Now, this is something that you have to backtest for yourself. There are some pairs where I just don't trust this early sign of change of direction, and pairs that I've traded so much that I'm if I see that, I'm gonna run my odds, especially if the liquidity sweep is aggressive and that change of direction is aggressive, especially if we just continue aggressively and we get the actual change of direction. That's when I'm like, okay, it's go time, right? But then you take another loss. You're like, you know what? Damn, I'm not him. I don't know what happened, but last week the markets hyped me up. This week the markets humbled me for sure, right? It happens, guys. It happens. So now this is the thing. We have to stick with our bias. Now, if we can catch the early signs, now again, this is if you would like to play aggressive. So if you don't play aggressive, this isn't for you, and that's okay. Let's just lower this for the visual purpose. We should know that we're in the buy zone, right? Let's clear this up. Right? So again, early signs of change of direction. If you like to participate and be aggressive in the market, this is for you. And if not, you wait for the actual change of direction. The high, if this is the lower low, this is the lower high, that's the lower low. We need the market to make new highs. You wait for this new high, that's your confirmation if you're a conservative trader. Okay. I hope that makes sense. If you're a conservative trader, you are not coming in on this setup. You're waiting for the confirmation for the new high. Okay. So same rules apply. Starting point here. My stop loss, 1 to 3 minimum. Right. And now this is where risk to reward comes into play. And this is where we start to advance, right? As a group, right? As a trader, right? Risk to reward minimum, right? 1 to 3. Now let's make this stop loss just a little bit tighter. 1 to 3 minimum. But look, Look at the clues that the banks left behind. Liquidity, 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 right? There's a lot of target points, right? A lot of target points. Now, again, this is the lower time frame. This zone is the lower time frame. Okay. Let's see if I can move this way. Right? This zone is the lower time frame, right? You have to understand the higher time frame structure. Higher high, oops, higher high, higher low, higher high. This whole thing here is the higher low, higher low. Now, if we can get this set up here, if we can get this, we will like it to clear these highs, making new highs, making a brand new higher high, right? Higher high, higher high, higher high, higher low, higher high, higher low, higher high. Give me an 8 if that makes sense. Give me a question mark if you're confused right now. And it's okay. If you're ever confused, it's all good. I'm never going to trip. No one's ever going to trip. Everybody needs the information anyways. Okay. Now, again, 1 to 3, risk to reward, minimum. Oh, we need that still technically. Now, again, I would like to see if we can target these highs, and this is where our risk to reward get better. We still need to have good money management and take partials along this trade setup, right? I need that to be clear. We're not just like not taking partials along this trade. Like we need to take partials. Okay. Now, if we can get this opportunity, we would like to hold it to make new highs. Now, let's just say, this is a whole hypothetical. This is a 1 to 6. So this trade was a +6. So 6 minus 4 is +2. 6 minus 4 is +2. Right? Guys, that's profit. That's profit. That's good. Now, again, that's like, how do I say it? The worst case scenario, right? Because the goal is to not get manipulated here, here. I'm not trying to have you get manipulated every single, like that's not the goal. The goal is to catch the real move and to be able to identify the real move. So I'm just giving you worst case scenario. And I'm telling you how it happens, right? So let's go ahead and go back to, oops. Let's delete this. Let's delete this. Now let's come down here on the lower time frame. So on the 1 hour time frame, this is the lowest pullback. That's my closest BOS. Again, that's my closest liquidity sweep. This is my change of direction line. So let's take a look. Let's watch how the market, watch how the candles look. First off, before we break anything down, let's look how the candles look. So this is the gem, right? We can't even see this setup that happened because it's inside of here, which means we have to go lower, right? This is my closest BOS on the 1 hour time frame. But if we go time frame by time frame, there are still pullbacks in between. Let's go to the 15-minute. Let's go to the 5-minute. I'm gonna go to the 1 minute just for the structure. Look at guys. There's like nothing, everything is the same no matter the time frame. Would you consider this a break of structure? Yes or no? Would you consider that a break of structure?
Yes.
Yes. My change of direction line is here. Boom. Now, I don't really like to use 1 minute starting points. I like to go to at least the 5 or the 15. So let's see if there's anything on the 5. There's this candle here. Let's go to the 10. And it's okay to use one candle, especially like if it's like the dominant low. Oops. Okay, so the 10 and the 5 are the same candle pretty much. So that's fine with me. It is what it is. But notice how it comes right back in there. Now on the 1 hour time frame, you don't see that. You don't see that opportunity. So you would have missed this whole setup. You would have missed this whole move. Now, again, I'm not saying that's wrong. That's not wrong. To be conservative and to wait for your setups, that is everything. That is everything. You should trust everything that you be thinking about. Trust it. If you back test it and you see it play out and you know that, you know what, this is working for me. I need to wait for this. This is the confirmation that gives me progress. You know, wait for your confirmations, right? It's not a bad thing to wait. But again, if you're looking to develop and get better and advance, this isn't a bad move. This is alone, just where it stopped right here. This is already 680 pips, 0.01, $680, right? That's a good move. So let's go down to 1 minute and break that down again. Let's see if it looks better on the 2 minute, just for like visual purposes. Oh, let's cut that. Let's go to the 2 minute real quick, see if it looks any better. 2 minute looks a little better. Maybe we could shrink up the starting point a little bit, get more of a snipe. Again, my stop loss is here. Let's see, 3 minute. You get a bigger stop loss, but now the setup is more defined, right? Now the setup is a bit more defined. We have lower low, lower high, break of structure, change of direction, right? And it gives us the same starting point. Still fine with me. The setup is there. I'll get to your setups right now. I'm telling you guys, this was the only move you needed. And this took care of you, I believe, last week and this week. Now, if we jump up, look at where the market's at right now. Look at where the market is at right now. Guys, this is information that can change your situation. Understanding liquidity, understanding break of structure, understanding what you're looking for overall in the markets, understanding, period. If you could have caught that, that's 2,349 pips, 0.01, $4,000+ right? Now, guys, it's doable for everybody. It's market structure. It's a market structure. Like there's not like anything different. Now again, look at the same thing happened again. I'm gonna do this and then I'll get to you guys' your charts, guys. Same thing happened again. Notice, look at how this move down here gave us the break of structure or the change of direction that we needed. This move here gave us the change of direction that we needed, right? It's not the prettiest one, but hey, we're on the 4-hour time frame, and I do see candles hanging above that change of direction, right? For sure. So what does that tell me? Oops. What does this tell me? Am I bullish or bearish? Is my idea still bullish or are we going bearish? Bullish, baby. Let's look for bullish. Now, it's not going to be easy. Never going to be easy. right? Because if that was the case, everybody would be a millionaire off trading. We understand that. We get that. Now, as traders, guys, we have to think in scenarios. We should never think, oh, my trade, I know how to trade. I'm the shit. Like, yeah, I'm like, out of 10 trades, I TP 6 of them, 7 of them. Like, I know what I'm doing. Like, what I say goes. Like, guys, it's not like that. Okay. Never like that. Always think in scenarios. Because even if I was looking for buys here, let's replay this. Let's say I was looking for buys here. I should already be thinking, what can possibly happen? Right? I know I'm looking for buys. There's a BOS here, which means there's a starting point here for more buys, just in case. Now, there's a couple things that can happen. Market can give us a nice entry. That's one. Market can consolidate for a while. It can look ugly. It can make you second think your decisions, right? Sometimes even make you want to jump out. And then the market goes. It happens. Looks very ugly, right? The market can do the opposite, consolidate, give you profit, another break of structure, and then change direction and then go. There's many things that can happen. So you have to think about these things and prepare yourself, right? You should always think what can happen with this trade, because when you can foresee these things, you're not really scared when they happen. You're not like overthinking. You're not like emotional when it happens. You understand what you should be doing based off of the structure that is being printed, because you're a good student and you take down all the notes and information given to you, right? So there are many things that can happen in this setup. Technically, it has to here to give you some answers. It can mess around all it wants. It can mess around all it wants. It can go up. It can come back down. It can go higher. It can consolidate. If this zone holds, the zone holds. What can we do? We can't say like, oh, don't consolidate today. I'm looking to buy. You can't say that. It's the market. Like, makes no sense, right? Sometimes it happens. Market can hang out. Now, this is where it can what comes into play, right? You have to think what can happen. What if the market hits your stop loss and then goes your way? What if the market hits your stop loss and then goes your way? Does anybody know? If you know, unmute or type it in the chat. I'll give you a couple seconds. What happens if the stop loss gets hit and then the market goes your way? Anybody know? You have to wait for this candle to close. That tells you everything, right? Now, again, you won't know this information unless you get on these calls. Guys, the information is here for you. I'm only going to tell you things that work. From Oren himself, all the information I got, well, I guess it's a mix. It's combined. I get a little bit of Mike, a little bit of Jordan, right? A little bit of Siva, a little bit of the smart money crew with levels, right? To strengthen up the bias, right? But I give you everything that is inside my head. I promise you, I do not hold back. So you have to think in scenarios. What can happen here? Let's see what happens. Market gives you profit. Market goes deeper, gives you a little bit of profit. See that right there? You're already thinking like, yo, let's go, baby. We in there, right? We the shit. We him. Market gives you more profit, consolidates. Now that's the thing. Look at, check me out. Does the market hit your stop loss? Does the market hit your stop loss? Yes or no? Yes. How do adapt when the market conditions change? That's not a very easy trade, is it? It's not. That should have been a buy opportunity because market said, hey, we should be looking for buy opportunity. And the market's rough. It's like rough waters. It's like trying to sail a boat in rough water. It's like throwing you around everywhere. It's tossing you around, bro. Right? Hit your stop loss. But now we have to start figuring out why. Right? We don't break structure. So this would be more of a liquidity sweep. Right? More of a liquidity sweep. Now on this time frame, this is my break of structure. And this is my change of direction. So let's take a look at that. But what did the market hit here? Guys, always look left. When in doubt, in order to get right, you need to look left. Yes, there are imbalances, and in some cases it'll always be imbalances. So like it'll be imbalances. But I trade levels. I'm not trying to throw a shade on SMC, but I don't look for imbalances. I look for starting points and I look for head and shoulders. So I need to see what did this candle and wick respect on this left-hand side. Give me a 7 if that makes sense. So let's go ahead and dive deep. 1 hour time frame. Can you guys see it? Circle it, annotate if you guys can see it. From here to here, oops. If you guys can annotate, there's a starting point inside that circle that we need to highlight. Let's go, Paul. Let's go, Nova. Let's go, Julio. Oh, I messed it up for sure. Oh, where we at? Where we at? Right there. Let's go. Starting point right there. Very faint starting point. If you could delete that, that'd be great. Let's go. Thank you. Very faint, but look at the structure. Does the candle pull back? Yes. Do we break structure? Yes. Guys, sometimes it's the break of structures that we don't even think are like, oh, that's not a break of structure. The market's going to say, think again. Think again. Now, again, we clear liquidity. We have a starting point right there. Look at the market. Now, I'll be honest. I didn't get in on this move. I was waiting. This zone was highlighted on my chart, but I didn't get in on that move because I see a zone right here. And US30 be throwing like 300 wick pips out. That's 170. That's a lot. From the market that kind of started here, 180. That's a lot, right? So not down from here to here. That's only 90. I was like, the market can easily pump down. I'm not going to enter their first touch. So what do? On this time frame, I'm seeing it's still the dominant low, and this is the dominant high. But I'm starting to see the market hick up inside of here. What is this? Why is this wick here? Why is this wick right here? And then the market goes lower. What is that? Let's drop down to a lower time frame. Drop down to the 15. So let's just delete this stuff. On the 15-minute, this is my break of structure to the downside. BOS downside. My change of direction line is here. Guys, would you consider that a change of direction?
Yes.
Yes. Now there are two setups you could run with this, right? There's the starting point here, very large candle. I mean, this is 15-minute. It looks large because we're zoomed in. In my opinion, anything lower time frame is not that big. But again, it's indices, so you have to play careful. So anything, in my opinion, anything under 10K to trade comfortably, you should not be trading regular indices. Indice minis, right? It allows you to leverage $4 to $5. Very, very clutch. I still leverage indice minis. Why? Why do you still leverage indice minis? Bro, because you can partial out. I can't partial out on a 0.01. I either got to let it sail or I'm hitting stop. I mean, break even, right? I have to trust the trade all on that much. But like with Forex or indice minis, if I'm up X amount, I could partial out some. I mean, yes, maybe your spread might be a little different, or your broker fee might be a little different. But hey, if I'm gonna be partially out something, I could actually take home and pull out of the trade and take out of the trading account. Like, okay, I'm willing to pay a little fee, a little extra fee to be able to close some money. Like I'm okay with that. You have to ask yourself if you're okay with that. right? Now we have the starting point here, and then we have the left shoulder here. Now, again, this is for the aggressive traders. This is for somebody who wants to see if they can get in early, right? On the 15-minute, this is the starting point. Let's see if there's a smaller starting point. I don't even know if it hit that low because I got in on the 15-minute starting point. I'll be honest. I'll be honest with you guys. Got nothing to hide here. I mean, that's the setup. I like to take clear setups, right? Clear setups. And I'll be holding drawdown too, like everybody else. I trade like everybody else, right? This is my change of character. What time frame is that for the 1 hour? All right. So again, I would like to see if we can TP here. That's my main goal right there in this trade. I want to see if we can get in with this opportunity and send it back to make new highs. Give me a 10 if this is making sense so far. Again, why are we taking this trade? One, the market's bullish. Two, we were waiting for buys. We have buy zones marked up. Three, it swept liquidity. Four, lower time frame is giving us what we're supposed to be looking for. It's doing what it do, right? So 15-minute. Let's see if we can get the opportunity. Let's see what zone hits. Let's make this 5-minute zone purple. Yeah. All right, let's take a look. Moving hella fast. All right, cool. I mean, it looks like all of them pretty much touched. But let's just clear some things up for trading purposes. But it looks like that was the move. Let's see. Notice how this wick is like a sharp wick, and then the market starts to immediately reverse. So again, this would possibly be early change of direction, but I would still like this one. Why? Because we have low, high to low to possibly make a new high. So let's take a look. Again, what time did this happen? This is 10 p.m. Oh, no, that's 9. Okay, no, this is the morning. This is today, okay? So look, New York Open. Take a look at this, guys. This is where we can really get good at trading New York Open. If you can get really good at looking for head and shoulders, bro, you're going to be an effing GOAT at New York Open. You're going to worry about no other strategy if you could focus on BOS and change of direction. Notice how the market creates liquidity. New York Open, we clear liquidity, and then we immediately aggressively change direction. If you can locate that setup for the New York Open, your trading is going to level up by January 1st, 2026. I promise you. Let's take a look. Market changes direction. I don't even know if it comes back this low, but let's take a look. That would be crazy if it gives us another opportunity. Come in there. Yes. Oh my goodness. You see what I'm saying, bro? You see what I'm saying? Guys, I would not lie to y'all. I'm telling y'all, what is this? This is all right. This is almost London. It's almost London. Market comes right back for London. And then boom, market just takes off. Market just takes off. And then market gives us new highs. Market gives new highs. So, guys, I hope I'm not making this complicated. If I am, let me know. That way I can try to break it down even simpler. I really try to focus on breaker structure and BOS for the visual purpose. If you guys want me to break trading down even simpler, I won't even say none of the liquidity areas, nothing. As long as you follow structure, you're going to be okay. Man, as we get more advanced, my whole point is to just make sure everything sticks. Like, that's my goal, right? That's my goal. But guys, catching this move, I mean, I only caught from here to here. That was 550. Thankfully. Thank you, Lord, for letting me understand the skill. Very, very blessed. But whoever held, bro, somebody copped, 800, 900, 1,000. Someone made some money, right? But this was me. Gang, gang. Right there. Made new highs, though. My bias was correct. Higher high, higher low, higher high. We made new highs. Let's go ahead and we'll take a look at the setups that are sent in before we hop off. I believe Nova was the first one. I like this. I would still leave this. Leave this here because the market does like to come back at random spots. But now I like this. Right? We got your zone, right? So mark that up, BOS, because this is higher high, higher low, higher high, higher low. This is all liquidity. This is no new high, right? Higher high, higher low, higher high, right? So the point is for the market to make another higher low and then shift the market up higher, whether it's this zone, maybe even this zone or this zone. There's 3 opportunities in there. Got to run the risk to reward. Isn't it like so important why we run this information on risk to reward? And again, Nova, you don't have to be the first one in every single time. Wait for your change of direction confirmation. If you get that, okay, cool, let's run it. If we don't get that and the market just continues to fall, that zone wasn't it. Does that make sense? That's also how you stop taking unnecessary losses. No change of character, no opportunity. That simple. You're going to find yourself taking less trades, but hey, you're preserving your capital. And at the end of the day, it's all we want. Now, we also have this with my liquidity sweep. That's very ugly, but that does sweep liquidity there. So that's also a zone. Now, again, we don't have to be the first one in. Let the market change character. If the market doesn't change character, and let's say it comes just to 100%, that's not enough. We want the change of direction. Yes, no change of character, no opportunity. And we have this locked and loaded right here. So this is something that we've been wanting. Let the market come to us. This is the last buy opportunity I would take. And I would take this first test trade it, right? Once we get this, boom, take an opportunity. 1%er right here. Send the market back up higher. I like this. This is good chart work, Nova. Good chart work. I would leave this here. You can probably delete this, delete. I mean, you could probably save that. Keep everything. Just delete this right here. You could probably put BOS, right? Just to keep things very clear, no extra lines. BOS, and you can either mark up your starting point for your buy or your left shoulder here for buy, because you do need to mark up your new opportunity zones. But other than that, Nova, solid chart work. Everything is clear. I mean, your level up these last 2-3 months, crazy. That's fire. Let's go. Fire. Way to stay locked in. Let's see what you got, Austin. Let's see 1 hour time frame. Very curious to what that looks like. Oh, look at that, guys. Looking for buys there. Took 1 loss. I'm able to take another buy opportunity. 1 loss, 1 buy. I'm up 2%. BOS. Do I change direction? Oh, wait. Early sign of change of direction. Oh, wait, no, this is the change of direction. New lows are here. We do get that. Do we get the shoulder? Yes, we do. Snipe, you're off. You could have caught that. Whoever focused on Ethereum, if you didn't catch this one, you should have caught that one 1000%. That's not a bad counter trend, Austin. I do like opportunities down here. If the market can trickle its way back down, we'll wait for a confirmed change of direction, and then we can start looking for buys. That's not bad. But also, if it does change direction to the upside, right? You're on the 1 hour time frame. You got to think about, like, what is this hiccup right here? That's a starting point. Lower time frame, there is something right there. The market is respecting that candle. Now, it's not clear on this time. Let's go to the 15-minute, right? Let's follow these structure points. We do have a break of structure to the downside. Let's shrink that up. The market can definitely drop a bit lower. It's my BOS to the downside and my change of character. If we get a change of character, we can possibly continue higher. So it's not a bad counter trend. But we this is also possibly a continuation, right? Just keep that in mind. Let's go to 30-minute, 1 hour. This is the 1 hour. Okay, cool. So now let's just delete this, right? And let's just focus on this. Let's say you're focused on this structure because it looks more like a head and shoulder. Okay, I get that. Well, let's say you have cells in your head, right? Let's say you have cells in your head, and I get that because some people look for cells and some people look for buys, but you also have to understand how to adapt, right? And let's just say we're just going to use the shoulder for an example. If we were looking for cells here, whether it's your starting point or my shoulder, if we violate and make new highs and also hit stop loss, our cells are no longer in order. We have to continue looking for buys. Does that make sense, bro? And that goes along with understanding what's going on in that higher time frame bias. The market is very bullish. So to try to catch a falling, like you're trying to catch the market at the very, very top, in my opinion, it's very, very bold and brave. You have, a lot of courage because the market can easily continue, but you can also catch that little counter trend. So it's all about risk to reward and understanding just what you're looking at and how to adapt to market conditions change. So once you know how to adapt, guys, there is no fear. It's just adapting. Like, yeah, you have to wait. You can't get in the markets right away. Like, oh, I lost. Let's get in again. 5 minutes. Like, it doesn't happen like that. Sometimes you have to wait an extra day. Like, okay, you took a loss. Damn, I have to wait a day. Dang, the market never came to me. I got to wait another day. Market's still consolidating. I got to wait another day. Okay, the fourth day the market came to me. Let's run it. Right? I hope that makes sense. Sometimes it doesn't happen. Overnight or in the next couple of minutes. You got to just wait for the next setup. Just wait patiently. Set your alerts and just wait for the market to come to you. If the market doesn't set your alert, bro, continue to live your life. Continue to study. Continue to hit the gym. Continue to diet. Continue to, spend time with your loved ones. Like, bro, we're not a slave to the trade. We still have lives outside of trading. You know what I'm saying? So just stay locked in, have your alert set. But again, my apologies for starting the call late. We had a call with, Washington, Nevada, and California. But I hope I gave you guys a little bit of insight on understanding liquidity sweep and how to play more aggressive with that rather than just taking every liquidity sweep and understanding the possibilities of what can happen. Trusting your bias. Trusting your bias is going to be one of the hardest things you're going to do in trading because you're just going to probably see 1 loss, 2 loss. Everything is right here. Emotional damage, bro. You're just going to see a lot of things and a lot of negative things. And you might even have FOMO from the chats. You might even see some of your peers winning, right? You might even see Miguel catching bags. You might see Neri catching bags, Gio catching bags, Junior saying he's up on gold, right? But you're personally having a bad week. You probably had 3 or 4 losses already. You can't have the FOMO. You have to trust your bias and trust what you're seeing is going to play out. It just has to patiently play out, right? So I hope tonight's call gave you guys some clicking moments and little better understanding how to play aggressive. I do want to continue advancing these calls because I want to continue getting you guys up to speed, hitting different levels. Like we can't just stay at the same level forever. We have to continue to grow. We have to continue to sharpen my mind, your minds, right? I feel like everybody can trade. Everybody can freaking trade, bro. I don't think this is just for random. Like, no, everybody can trade if they put in the effort. So I'm willing to give you guys effort. I'm willing to match the effort you guys give me, 1000%. So let's get it, man. Let's get it. With that being said, that is it for me. I hope you guys have a great weekend. Continue to back testing it better. I will see you guys on Monday. Love you, twin. Let's get it.